FirstRand is a banking, insurance and investment group which includes First National Bank, Westbank and Rand Merchant Bank.
Right, and we mentioned them at the top of the list because they are the largest by market capitalization. We'll look at the share chart in a minute, but yeah, they've had a spectacular record in the last decade or 15 years, really surging to the fore in terms of our local banks.
Market cap here, 291 billion rand, a PE of 13, dividend yield of 4.4%. The share price graph gives us a sense of that upside that Nesson was referring to, although tracking just a tiny bit lower. Are we going to see more pressure on this one, Nesson?
I think, amongst the banking stocks, this is the one that I probably like the most. The reason being is, if you firstly look at valuation and, we compare it to the market valuations, I don't think you're paying a lot on a 13 times multiple. You could have those negative factors that you mentioned priced into it already to some extent, potential downgrade. FirstRand was not one of the banks that's implicated in the Forex story, so you've got very little risk of that. But still very much plugged into the mainstream economy because it's the biggest bank on the local market. So we'll have to look very carefully at what happens in the budget to see whether or not there could be factors that influence the FirstRand and the banking sector in total. But for the moment, I think it's very well run, very well managed business. It's always been a star performer in that regard, and it's one that I quite like.
So Paul, that is lucky because we obviously have a holding in FirstRand.
Yes, we do, and we sort of got into it interestingly when we were having a show where we talked about global payment systems and about fintech and about the way banks are using technology to drive down costs and increase productivity, and they're a global leader in that. But I must say it's a bit of a conundrum. I must say it's tricky because that's exactly what Nesson said. It's on a 13 PE, so it's dirt cheap. They're doing a lot of work. There's still a lot of work to be done. It's not like their systems never fall over. In the last couple of quarters, I can remember a few days where they've had system outages, which really shouldn't happen in the modern environment.
So when you say it's a conundrum, what do you mean? Do you think that we shouldn't be holding it?
Because it's A, cheap, and because B, as Nesson said right up front, the local economy actually looks okay-ish. I thought you were going to bite his head off about that. Did you miss that one? Where he said the local economy looks extremely favourable?
No, I'm just reserving my comeback for a little later in the show.
So I don't know. I mean, the share chart, let's put that back up again. What's important about that is you see how well they did in 2016, but that's after the Nenegate debacle at the end of 2015, that big, sharp waterfall effect that happens there at the end of 2015. So they're kind of back where they were, but they're still cheap relative to their earnings.
So Nesson, qualify that statement that the South African economic environment is looking better.
Okay, so I think it's largely due to base effects. So we're going to get a bit of relief from the drought, which is going to help the agricultural sector. We are going to see, we've seen commodity prices improve. So the mining sector itself, may actually improve on the back of that. There's still a question mark about strikes. I think, we did have a fair amount of strikes in 2014. Last year wasn't so bad, but it might actually rear its ugly head this year.
And then consumer balance sheets, not
consumer
so bad.
Balance sheet, not so bad.
But where's
inflation
the data to
coming
support
down.
the fact that consumer balance sheets are not so bad?
Well, base effects again. So like if you were pulling in credit extension last year and the year before, people have, kind of looking a little bit less levered than they were before, apparently.
I think that's hearsay.
Yeah.
But we can't get away from the fact that economic growth, GDP, is still expected to come in at around 1%.
Which is
so that's
anemic.
That's dismal.
But it's better than last year, which was 0.4%. So an improvement.
You see, he's even more optimistic.
You're also one of these glass
He drank
half
the same
full
Kool-Aid.
people. Yes, you did. Anyway, so let's go back to FirstRand and call this one. Is it hot or not?
I like it. I think it's hot.
Paul?
I worry about this political trajectory we're on where there could still be some negative surprises. So I know it's Monday and you might think I got out of bed on the wrong side of the weekend, but I'm going to go not hot.
When you say political surprises, I'm sure you're alluding to the cabinet reshuffle that everybody is
Who knows? I mean, there's been a lot of rumbling.
anticipating a cabinet reshuffle. Let's see what happens. So you're not hot on FirstRand, even though we hold it.